Morning, I'm Amy Love. I'm the CEO for the Forum for Women Entrepreneurs and Executives. And it's my pleasure this morning to have the chance to moderate today's panel with an excellent and distinguished group of venture capitalist entrepreneurs who will be able to impart, I think, some realistic experience and knowledge to you all about issues around how do you build and sustain your team. I'm sure many of you all have heard the comments before about when you bring in your business plan or you finally get that meeting with the VC, usually the first page they turn to is the management team. That's first and foremost oftentimes what they want to know. What's your background? What's your track record? What's your success? Who have you put in place that they're going to entrust their money with? And so there's no denying the importance of not only knowing how to bring together the right team, but also how to work with, manage, and develop that team over time so you truly do create a scalable, sustainable business, which is what we're all focused on for those of us that are entrepreneurs. By background, I actually launched a national sports magazine that competed with Sports Illustrated Women and Condé Nast Women's Sports and Fitness. I also ran a software company, which was software hardware combination device, PC consumer electronics combo device that we launched at Demo. And I'm actually about ready to step down as the CEO for FWE&E, and I run a real estate investment wealth management company starting March 15th. So talent and team is very important, but I think today what we'd like to do is have the panel introduce themselves. I have a few specific questions I'll be asking, and then I want to make sure we set aside time so that you have the chance to ask your questions. You're here today with a specific, hopefully, reason in mind as to what you're trying to glean, and I want to make sure you all have the chance to ask those questions as well. So we'll make sure we set aside time for that. Sound good? All right. Before I have the panel introduced real quickly, how many of you all already have a business that you are currently trying to run? All right. How many of you all are, how many of you all are currently GSB students? How many of you all are out in the workforce, long time graduated? Anything more than 6 months. All right, so good. It's a good mix here. How many people are interested in software? Hardware? A couple people on hardware. How many B2B?
Back to banking.
How many non-tech?
How many non-tech? All right. How many people think tech actually plays a role in everything? Okay. All right. With that, it's my pleasure to allow our panel to introduce, and then we'll move forward to some questions. So why don't I start first at the end of the table? And Howard, why don't we have you start?
I'm an early stage venture capitalist. I work with Bill Draper. The Draper name is kind of big in the Valley, usually because of Tim Draper at Draper Fisher Jurvetson. Bill is his dad. We do kind of a high volume, maybe between the two of us, 10 investments per year. I got a little bit of notoriety for being the first investor in Skype and helping them write their business plan and bringing it through to a sale in 3 years. And when we get to the point on teams, those guys epitomize the right team. So we'll get to that later.
April, please.
I'm April King. I am a retained executive search consultant with Howard Fisher Associates. We are a boutique firm, about 30 years old. And roughly 80% of the searches that we conduct, which are all from a specialty standpoint, CEOs, board directors, and direct reports to CEOs, about 80% of that work is conducted with the venture capital community and all in technology. Prior to that, I was the recruiting partner at Sequoia Capital for 3 years, and before that with another large retained executive search firm.
I'm Matt Glickman. I'm the co-founder and CEO of Merced Systems. We make performance management software for call centers and other big people-intensive operations. I've been doing that for about 4 years. Before that, I was the co-founder and CEO of Baby Center, which is the consumer internet company focused on new parents. And prior to that, I was, before that I was at Intuit, which I did right after I got out of Stanford Business School in 1993.
And I'm Nick Sturriali. I'm a general partner at Seven Rosen Funds. Seven Rosen Funds have been around for 25 years. We have about $1 billion under management. Some notable companies that we funded: we wrote the first check for Lotus. We wrote among the first checks for Compaq. Sienna, Citrix, and lots of other companies. We like companies that start with the name C as a general rule. I've been there for 6 years. We do all early stage, any kind of technology, and a little bit of healthcare. Before that, I spent 14 years at 3 different startups, including founding my own startup, which Seven Rosen founded, which is how I got pulled into the dark side. And so I've had my teeth kicked in hard a couple times, and I know how hard it is to build a company.
Great. Well, wonderful panel. And how we're going to kind of set the stage is, in essence, assume that this is from a case standpoint. 2 GSB students and 1 out of the engineering school. You brought them over. You guys are interested in trying to start a software company. It's kind of the context around which we're going to try and answer some of these questions. And I'm going to focus on kind of 3 areas. First, founding the business, growing the business, and scaling the business. If we have time, we'll talk about kind of firing and some HR issues. So with that, in terms of founding the business, really like to look to both Matt and Nick, given your entrepreneurship background. Who were the founders of your business? How'd you guys bring them together? What went right and wrong with the relationships?
Go, you start.
I'm first? Okay. So I'm a little bit unusual in that I have started both of my businesses with the same person, a guy named Mark Selko, who I met here at Stanford. I knew I wanted to be an entrepreneur, and one of the things I was hoping when I came to Stanford is that I could find someone to be a partner with, because I think you either decide if you're the person that needs to do things on your own or with someone else, and I knew I needed to do it with someone else. And the other unusual thing is that we were very good friends, and I think the usual rule is it's hard to work with your friends, and we've maintained that friendship through 2 different startups, and we've had pretty good runs with both companies, and I think that's a tribute to we have similar outlooks and values, and we can trust each other, but we bring pretty different skill sets at a base level. I'm a product guy, and he's a sales guy, and so we are pretty complementary in what we do.
So I was at that business school across the bay, and we were at an entrepreneurship workshop, actually sort of like this, and I met 2 PhD students over in the engineering school, and they started to talk about what they were doing, and these guys were hyper smart, very large brain to body weight ratio. And they were working on some very interesting software in the semiconductor area, and I had some background in that, and so I had quite a bit of fundraising background. One of the companies I was with, we raised $750 million over 8 rounds, and we didn't have a product, so I was the public apologist and the full-time fundraiser. So we got together and said, look, we can do something with this, and we started the company, and it was fairly easy because everybody's DNA background experience nicely split apart. So we had a good array of skill set, and I think they were so passionate about the product they were working on that the business aspect of it became very easy for us to work through. And they were very trusting, so out of guilt and feeling like doing the right thing, setting up the business, the org structure, the cap table, became fairly easy to do.
So these are 2 gentlemen you met at a conference, didn't have any background with them.
Yep.
Any bumps in the road, or how did you guys meld? How did you get to the same point? Did you sit down and say, let's have a come to meeting about style, approach, ethics issues, or did you just kind of go on the fly and it worked itself out over time?
These gentlemen who were 10 times smarter than me were 25. They'd never been in a business before. They'd done a couple summer internships, and so it was all, honeymoon candy, flowers. It didn't really matter because we were having fun doing this, and they knew what they were working on was really interesting, but we had no notion of how big the business was going to be. So sort of the economic greed, how does that game play out, wasn't foremost in their minds, and I think that made it a lot easier. Because you didn't know if it was going to be huge or a shutdown. So why argue over it?
Okay. Well, out of curiosity, Howard, do you have an example, or have you ever run into a situation where you've seen close friends come together and some challenges they've run into in any of your firms?
Close friends are usually a good starting team, and every once in a while they have a blow up later.
Okay.
And it's uncommon, maybe 20% of the time, but when it happens, it's very uncomfortable. And usually one of the founders will come to the board and say, "Can you guys please throw my partner out?" Because the founder doesn't want to do it himself. He wants to protect the relationship. And in some cases, the board looks at that guy and says, "No, you're the guy that's getting thrown out." And in other cases, it's usually a pretty difficult scenario, but it does happen on occasion. The best environment is if the 2 people do know each other in the beginning, and friends are totally okay with me, and the longer they've been friends, usually the better. The bigger issue is you watch their interactions between the two, and when they're talking with you and are they well balanced, or are they already trying to show who is, more important than the other? Are they trying to talk over each other? Are they, what is the relationship between the two of them?
Great. And April, from the standpoint of being brought in by venture capitalists to help round out a team, how do you go through this process of looking at the complementary skills in the existing management team, and how do you make that assessment, and how do you best help a new budding firm or organization come together with the right team?
Well, I think there are a lot of different relationships that you have to look at. You have to look at the founding team, and you also have to look at the relationship that the founding team has with the board. When we go into an executive search assignment, it's usually a little bit later. So the team's already probably gotten to a size where it's might be a handful of people in some cases, but for the most part, it's a little bit later. So I think what the panel is talking about currently has to do with the initial group. And, I have also seen cases where I think, the friendship issue isn't a huge issue. It has, as Howard mentioned, more to do with the interaction and the relationship that those two or groups of people have. So, when we go into an assignment, we also look at that same dynamic. And, if you think about it, when you're building a company, clearly you've got a product in mind, you've got customers that you have to deal with, but also internally you have to be able to work together. And in any scenario, you're dealing with people dynamics. And so we look a lot, we look to those people dynamics when we do searches. And we try to figure out pretty quickly who the leader is in the organization, who the followers are. It goes back to sort of sociology. If anybody's taken any sociology classes, it's group dynamics, and that also includes the board.
Okay, great.
I think just one quick comment. I think the other big factor, when we do a lot of seed projects that are 3 engineers, a dog, and a dream, and you get situations where you get past entrepreneurs that have had bad experiences in startups, either with their investors, with their partner, the company didn't make it. So to the extent they have some scar tissue around starting companies, they tend to be a hell of a lot more paranoid about how the thing gets structured, what they get out of it, what's the downside protection. And so that's where you get more conflict, is where people that are afraid of what it could be on the bad side. And so then they want things really oftentimes negotiated in a way that doesn't start out in a trust building mode.
So with that, I would say let's dive into that a little bit about some of the kind of initial agreements that amongst your founding partners, you 2 or you 3, put in place. And then if we can focus first, maybe from the entrepreneur standpoint, how did you initially structure company's ownership amongst your founding members? And then from that, let's then take it to how does that extend once you start to move forward with outside investments in terms of how you focused on that? And at the end of the day, we're talking about talent, retaining talent, having people feel that they've got ownership stake and opportunity, as well as as you talked about. I think post the .com, there's this issue of also wanting to make sure you're protected on the back end. Some people say entrepreneurship is actually fairly costly for some. So let me start with the entrepreneurs. Talk a little bit about how did you first structure your company and the ownership amongst the founders?
Yeah, we've done consistent thing with 2 companies now is it's exactly 50-50 split for equity. Any follow-on equity to the extent is 50-50. Salaries, bonuses, everything has literally been 100% the same. And that just makes it a lot easier because then you're really in the situation. My personal view is when you have 2 people, I think it's harder with 3 and 4. The image I always have is that we just have our backs, to each other, and we trust each other, and then we're, each facing out a different part of the world and trying to conquer it, and that's hard enough to do. So it's nice to know that there's no wedge between you, and there's definitely times where one feels like they're paying the weight more than the other, and I think it's a sign of trust and value in the long-term relationship, and even even the selfish part of that we all look at to say, hey, this is really the best outcome. So that's where we still are 10 years later.
Well, I think the hard part when you get beyond 2 that have worked together is when you get 3 or 4 or 5 people. Because in reality, what you'd really like to do is be able to look out 5 years to see who really contributed to the company's success and then do the allocation retroactively. because often you get situations where one of the founders gets an enormous amount of stock in the company due to being the fortuitous timing event of being there in the beginning, when they end up washing out within the first 6 months or a year, and they walk away with a huge chunk of the company, which is completely unfair to the new employees on which the company is going to be built. So we really, when I'm with a project that is trying to get up and starting, we're looking at a Series A financing, we look at the cap table and say, does this try to, based on the job they're supposed to be doing, the responsibility they're holding for building the company, does it follow market norms about what the CEO should get, what the VP should get? Often, you do get a rock star CEO, and the whole thing is, he's the talent or she's the talent magnet, and it wouldn't happen without them, and they tend to get an outsized portion of the company.
Howard, did you want to?
I would have to say it's completely across the board, and every situation is very different. I mean, the experience that Matt and Nick had from the investor's perspective is that they had a business person and they had a technical person or technical people. And usually if you have two people start to that's the best scenario. You don't want two business people showing up saying we have a technology idea. I mean, that's a big no-no. Or two technology guys saying we have a big business idea, and usually say, well, maybe we can help you find a business person, or you can find one on your own. But when it's two or three people starting it together, equal weighting is pretty good. If you're in an environment where one person is really the kind of the senior person and they have a lot of experience and they have an idea and they're going and finding a technical team, in many cases there's some significant unweighting in what the structure is, where I'm the CEO and I'm putting together the team, and the CEO says I'm taking 70% and we'll give 15% to each of you two guys, and we're all going to get diluted in the future moving forward. But I mean, I've seen cases where there's 4 founders and they're all kind of equal, and then I say which one is going to be the CEO, and they kind of look around and say he's the CEO, and I said, well, why don't you give him a little bit more stock, because that's the hardest job and he's the first one to get shot when something bad happens. And so it's really a kind of a different scenario. The ideal situation is you start out with the people that, you're a natural leader. That means you have followers, right? So you either have a partner who's equal, or you have a follower who's kind of come in quickly, and people are usually motivated by having an unweighted amount of stock early on. The earlier you are, if you're employee number 3, you kind of, if you have value to the company, a lot of people will expect that you get more stock. And at one point, if you're arguing about it right from the start, that's a bad sign. So if you see people saying, I think I'm worth more than you, and I came 2 days before him, and just think about restructuring the team a little bit.
I absolutely agree with that, actually. I've been in a scenario where I think if you're going to start a company and you've got even just one other partner, if you're at day one talking about the value that you bring to the table without really in context of what you're trying to achieve and the goal that you're trying to achieve, then that's a problem. If, we talked a little bit about, just briefly, friendship, and does that work? Well, yes, it does work if, again, you have the same goals in mind, and if you have the same ideas of what you want to get out of the company or out of this experience. You might have a different perspective or a different idea of what you want. But as long as you know what that is, then also that plays into the part of how much ownership you get into the company.
I could add a little more color that I think in my situation reflects all these other ones up here. Is that, Nick hit on this, that you really do have to think about the value and when you deliver it, and that if you don't, that's when you start getting into problems with your founding team, with the early investors who are really in some ways part of the founding team. So a lot of these problems can be mitigated by coming up with a real balanced approach where people have to, I think, be confident about their abilities and their ability to deliver value over time, and then realistic about what they're contributing along the way. So usually there are market data you can bring in to say how much should a founding team have, how much should be pre-vested versus they earn it, and there's usually some healthy combination. And to me, the hardest thing that I've seen when I've seen teams go awry is that someone's just not realistic about what they want. They're paranoid, they're greedy, they're whatever. If everyone's willing to compromise in some ways, you usually have a pretty balanced and stable future.
The number one rule of a startup is to drive risk out of the business, not optimize success a priori. So if you're worried about your share at the exit, at the beginning, you are not an entrepreneur by definition. You care more about your personal wealth than creating a business, and that tends to go, have an effect on the outcome.
Right. I was mentioning that I'm about ready to take on a new role, and it's with a person who was an investor in my company in '97. He's a former partner with Accenture, and he's grown the business to about 70-plus investors and more than $100 million in assets under management. But he's busting at the seams. So it's really this issue of how do you grow the business and then ultimately scale it beyond that. And was in a fortuitous position where I was trying to help him actually define what his CEO, COO roles are that he needs to have for the company. And ultimately he came back and he said, well, what's it going to take to get you? That's always a question you love having asked. And so after we kind of talked through that, the reality was the compensation was the shortest, easiest conversation we had. What we did then spend, because I've known him since '97, and we've been peers. He's been an investor in my company, I've been an investor in his. We've never had a direct working relationship. We spent the next 2 weeks really kind of talking through issues of what would it mean for the relationship to shift. What are his expectations? What are my expectations? What's the management style? How does he really handle conflict issues? How does he manage his employees? Where does he see the business going, and how does he see the number two playing a role in his ability to scale? And so I think as you talk about this managing the team, there's no underestimating the importance of making sure you all align at every core level around your management style and approach. And he and I are extremely different but very complementary in terms of the ways in which we value business, ways in which we value employees, but our approach and our skill sets, our strengths are very different, which does play into this complementary issue. So the reality is hopefully the compensation issue is the shortest conversation you'll have because you're focused on building a business. It's making sure that through the good, the bad, the challenging, the up, everything around that can go right and wrong with the business, you two are always going to be back to back building this business forward. And that's going to be the key part with it. So with that, I'm going to kind of shift to the next stage. Let's say we're growing the business. You've got yourself, your other partner, maybe two other folks. You've now been able to convince the venture community here in the Valley to give you, let's say, at least $2-3 million. They're going to say, now we want to see you actually grow your business. Take the idea and start to grow it. We're not yet at the point of scaling. We're saying we're going to grow it. We're going to take it from 3 employees upwards to 100. Where do you start in terms of trying to get the people? And this is kind of where oftentimes the comment is made that you can't afford B talent. And you really can't. Certainly not at this stage. I don't believe you can. And so how do you find that A talent? How do you go after it? How do you make it happen? So start on either side, entrepreneur, VC, recruiter, what have you. How do you help the founding team grow the business, bring in that A talent? There's the question of large organizations, entrepreneurial experiences, directly out of business school, hungry folks, 2 years. Experiences are all different, but how do you make it happen?
I'll start, and I'll say that it depends if you're down near the 3-person side or if you're up near the 100-person side. There's a huge difference. And then on the other axis there is, are you hiring people to build product and sell product, or do marketing plans, or you're hiring executives for the company? Those are two very different things as well. So we're involved at early stage, which is down near the lower side, so I'll talk more to that. And usually when funding goes in, we never have any intent of funding a company at the seed stage or A round, whatever you want to call it, where we're looking at the team and saying, you guys need a CEO. We just tend to avoid those. We figure if they don't have enough vision and drive to take the company at least to the first phase, then we shouldn't be risking money on them right from the start. We don't fund an idea, we fund a company, and the company includes the management of the company from the start. In many cases, it's not working out, and then you look at the changing the management or the CEO or whatever of the company. But for us, not from the start. So usually at the outset, it's you give them some money, they have an idea, they have 1 or 2 smart people on the technology side and 1 or 2 smart people on the business side, and they have to start building something, and they have to start going out and talking to potential. It depends on the type of company. They have to talk to potential customers. They have to do market research. They have to make sure that they're building exactly the right thing and they're not 20 degrees off. And so usually what it is the people within the company, they have friends or they have people that they used to work with, and the riskiest ones are people who've just come out of school and have no contacts whatsoever. It's a lot more work. The best scenario is somebody who's actually has some experience, has been working for a few years, came out of a company, and you say, well, where do you think you're going to get people? And they say, I've already got 8 people coming out of my last company. And your next question is, did you sign any papers that says you can't steal people from your last company? And some, oh yeah, I remember that paper now. But from the early stage, it's usually looking at people, especially on the technical team, that people know. And technical, you want to fund the best, smartest, hardest working technical people, and they can pick out a B player right away. They look at somebody, they interview them, or there's somebody that they know, and they've decided right away. And even if they make a mistake and hire somebody, they know within 2 weeks. And so then the next question is, can you fire them right away, or do you leave that tumor inside your company for as long as possible until it can actually cause significant damage to the company? On the management side, it's usually a similar thing as well. It's usually entrepreneurs. There's one team member who worked at Intuit before and knows his buddy from Intuit that they were at another startup before, and kind of pass the idea on them, and hey, you want to come and join us, and now we have funding so we can pay you. And then there's a difference between getting 8% of the company and 1% of the company. Did the funding come in before or after? But initially, and I'll leave it at that, it's the team and members of the team know enough people to get it from 2 or 3 people to 10 or 15 people.
I think as an entrepreneur, you just have to constantly network. And you guys are here at this forum. You should attend as many entrepreneurial forums as you can, meet as many people as you can that have similar interests. And I think that if you're going to found a company, you should have a list of, just continue to have a list of people that you would want to be working with. And you may not have a need for them yet, but just have a running list of people that you know other people, because when you're in an early stage organization, you don't have the money to hire recruiters. You don't have money to hire a retained executive search firm, and maybe you can hire some contingency guys, but recruiting takes a lot of effort. And when you're an early stage company, you don't want to deal with it, because you just want to build a company and not have to worry about who you need, what next engineer you need to hire, and it just takes a lot of effort. So, there's typically there are some entrepreneurs that start a company and they're very focused on product. There are some entrepreneurs that are focused on an idea. There generally is somebody within, in my experience, in that core team that has a network, and sit down together, talk about your general network, and what types of people you're going to need and what types of people you want to know, and then just try to establish that network and build out from that network. It'll just help you guys a lot as you start to really think about the scaling question. Now, when it comes to executive search, and when you start to build out your executive team, that's what you want to do when obviously you've got some money. And typically,
because she wants to get paid.
Yeah, I'd like to get paid. And actually, when you get that first influx of money, there is generally conversation with your board about, okay, how are we going to build this thing? And when you start thinking about the types of executives that you need to bring in, do it against a measurement of a plan and what your milestones are. I mean, if you need to get a product out in, 6 to 8 months, you better have a pretty darn good engineering organization and a very sharp leader in that engineering team. And then, you based on the milestones, you can start to determine at what point you need to actually retain a search firm. And at the director level, you really don't need to do retained. At the director level, there are a lot of different resources that you can use, and actually there are a lot of really good resources over the internet that you can use. Craigslist is a great tool, for example, that early stage companies will always look to. Engineers, Dice, there are a lot of different tools that you can use early on. Retain a search firm when you've got the money and you've got the need to bring in somebody at that inflection point of your organization. Those are the milestones, and have a plan. Don't try to hire somebody to help, an outside resource to help you when you need somebody in 2 months, because you're not gonna. It's not likely you're going to get that person right away.
For both Matt and Nick, thank you. Before your experiences as you built your business, as you went from just the founding stage, can you talk a little bit about what networks did you use to identify candidates or people that you sought to bring in? How did you go through the whole selection process? Was it the founders together making the decisions? Was it decentralized, individual, your case, engineering versus business? And how much time did you all spend on this process, at least at the early stages of trying to grow your business from the initial founding stage to that next stage of growth?
So I think the point that you made earlier was the critical one for me, is that VCs are looking to fund elite teams going after interesting new high growth markets. But that's sort of the optimum situation. And so if you're starting a company, the best way to succeed is to develop an elite team. So so that's an obvious statement. So how do you go about doing that? And from my experience on the startup side, if you're in a company that can get a product out or a prototype out in front of customers before you have to hire a large group of people, so much the better. Because to the extent that you can create customer traction, customer interest, to show that the idea has real merit, it becomes much easier to sell elite people to come work for your company. The real challenge here is that there are too many people like Howard and myself funding too many companies, and everyone wants an elite team. So there's this huge demand for A-class talent, right? And everyone thinks they're an A-class person, but they're not. I mean, it can't be. So the question is how do you stand out from the tens of thousands of other startups going after these elite people? And I think the best way to do that is to show that the business has true merit, not just PowerPoint merit. And that is really the task, I think.
Yeah, it's, first of all, I see two really different phases, the 3 to maybe 30, 40 people, whatever that size is, where there's a different character to the type of senior people you bring in and then the people you bring in beyond that. I think at the individual contributor, lead, manager level, I think there you're looking for a talent and you're kind of doing all the networking and Dice and Craigslist and all that. I think those people that's sort of a constant how you recruit them. But I think at the management team level, there really is just this fact in startups that there are people that you can attract at different levels and people who'll be successful at different levels, and not just from the classic that, the thing you hear about some people are good at, phase 1, 2, and 3. But in the earlier stages, not only is capital really critical, but really insight, touch to the market is really critical. And so I personally see a lot of people hiring executives in areas where all it does is add abstraction layers and keep people away from really what's going on in the market, and you're cutting down on the nimbleness of the business. So I think you really have to think carefully about, one, who can we recruit at each level and what kind of person. And there a lot of times you can only get a director, or only should have a director, and you need to think about that. And the way I think about it is, does someone on the team have experience in that area? If they do, a lot of times you're better off finding someone who's good, but who isn't going to run it forever. And then also think about the areas where you don't have the experience and where you really need to get it. And so my business wouldn't get funded by Howard, because we were two business hacks who started it. But I had prior to that, I'd worked at a software company at Intuit. So maybe I stand a 50-50 shot.
Yeah, but
you
your
mentioned
other
Intuit
guy was a
specifically.
product guy too, so that's...
He was a sales guy, right. So we were two business guys. So there's an example where I don't have an engineering background, no one is technical, but I had worked with and engineering teams in the past. So, there we felt like, okay, I could probably hire and evaluate a head of technology. And there we really did need a VP, and we needed to make it a big package and almost make that person a founder, because we knew we just didn't have the skills there. In other areas, marketing for an enterprise software company, professional services, sales, we felt like we could plausibly do the job for a while before we brought in someone who could really do it. And therefore we were able to find a different and better fit for a person in the earlier stage. Now that we're 70, 75 people, we're more at this stage where we're looking for people who have built larger teams, and we want them to do that. We want them to come in and manage rather than do.
So you identified the need on the engineering side to really augment the team with a very senior person. The package was almost that of a founder. Mm-hmm. On the other sides, it really was almost task-oriented, operational folks underneath your skill set and your partner's skill set, it sounded like.
I think it's a little more opportunistic, because we would have been happy to find the right person. The issue is if you find, my experience, and this is in kind of software businesses where I think teams can be smaller, that it'd be great to find a VP caliber person. The thing is, they have to be a VP who's willing to be a true entrepreneurial person, which is, they're getting in and doing like work 50% of the time, individual contributor work. And there's probably, I don't know, 1 out of 10 or 20 people who have the ability to go from the details to the bigger picture, but 19 out of 20 just can't or won't. And so the ideal thing is to find that person who can go full scale. But if you can't, then I think it's better in an earlier stage startup to find someone who can go, from the lowest details to the mid-level stuff until you get the company to the stage where you really need the.
Did both you and your founder interview? Did both of you all jointly make decisions on hiring? How did you go about the selection process?
Yeah, pretty much. I mean, I think it's good for whoever's really running the company to interview everyone as long as possible. Now we've been working together enough years that we're just, and my partner's still running sales directly himself, so he's on the road a lot. So we know each other well enough to calibrate on how they would approach people, and we also know when we need to get their opinion. So I guess we try to get everyone to talk to us, and we make exceptions when we're real cognizant about, that's a trade-off that's worth making.
Okay.
I think, one of the things too is how do you know whether or not this person's a rock star or not? A lot of people have worked at successful companies, and so they will tend to write their resume in a way that correlates their being there with the success of the company. And so you have to be very careful to separate the jockey from the horse, because he could have been sitting on Seabiscuit and it wouldn't have mattered, right? So there are a lot of people out there that have what look like very good resumes, and so you really need to dive in to find out what was their actual track record of contribution and try to separate out people, because you'll find there are a lot of people that were just accidents of timing, and so those people you can hire them, and then all of a sudden their speech about how good they are during the interview turns into a pretty dismal beginning, and those people you got to get out of the company instantly. You cannot let that stand for very long.
Have you all had any experiences where you've actually pulled somebody out of a company when you're still at that early stage, and/or have you made recommendations to your founders, from the funding standpoint, that they need to make a decision, that it was a bad decision on growing the business, it's going to really stall their ability to grow?
Yeah, I think everyone always says, that you should hire faster and fire faster. And I think the thing with these companies is they are fun and full of passion, and you really care about the people. You spend a lot of time with them. So I'm guessing everyone who's done it would say, yeah, they didn't turn over people fast enough, and that's just an emotionally hard decision to do at the time.
A lot of entrepreneurs and a lot of investors are the same, that they look at a resume, and that's a point of skepticism to start. Where if you don't know the person personally yourself, or have a trusted third party who knows that person directly, you're very skeptical about the quality of the resume. There's a lot of cold calling. You're trying to find somebody that who would know, not just a third party, because people never want to say bad things about anybody else. They're afraid of being wrong, getting sued, whatever it may be. So the trick is to find a friend of a friend, or a friend who actually knows that person and can say, well, let me tell you the truth about that. One kind of common misperception, which is somewhat related to this, is when you're looking for people, and I made this mistake myself in the past when I was at a startup company, is when you make your management slide and you say, okay, here's where our holes and here's what we have to fill in, so you rush out to find somebody who fills that slot who worked at some big company. Okay, we're going to go and get somebody who worked at Apple, because that means that we have design capability within our company. Or we want to get somebody who was at Siebel during their peak growth, who was a sales guy, because then we can put a guy that says sales, formerly Siebel, and then the investors will say, wow, they've got a Siebel sales guy. But part of the problem is that those people have no concept about what it's like to work at a small company or a rapidly growing company. And they're not willing to take out the garbage, or they're not willing to make cold calls, that they're used to having a 40-person organization underneath them who is doing all of the hard work, and they're just getting the hot leads and going and whining and dining. And when you've got 10 people in your company and you raised $1 million of investment, there's not much whining and dining, and there is no support staff underneath you. So when you're looking for people, the fact that they were at a big company, if they've only been at big companies, is probably a very negative thing. The flip side would be if you can get somebody who has the big company experience, but they got there because they actually built a company. I mean, Barry Schuller is my favorite example. He built a startup company. He was acquired by AOL. He ended up running, huge portions of their business. But he doesn't only know about big business. He knows about very small business. He's been there when it was 2 people and built it through the whole range. So you want your company to grow with the time moving forward. When you're small, look for people who have experience in growing and building companies from small to large, and that will be a lot more valuable to you than just thinking you're going to get some guy who is a general manager of Siebel Sales.
Just one other quick little anecdote like that. I think the other one to be mindful of is in the Valley there are a lot of what I would call academic intellectuals that are phenomenally good at diagnosing what's going on in the market and the players in it and why one product wins over the other. So the interview looks sterling, right? And your drool's coming out of your mouth saying, we need to get this person. And more often than not, they are terrible at creating organizational success. They are awesome at diagnosing a problem, but they can't lead a team for SHIT. So you gotta be very careful to talk to the people that worked for this person, and because otherwise you can be really fooled in hiring somebody that you think is going to lead your sales group or lead your engineering team or become your CEO.
Great. With that, I think we're hearing a lot of terms about making sure that as you're building your team, you find someone that knows that person. I'm curious, April, from your standpoint, in terms of any tricks and the ways in which that you apply to get people to call you back to talk about references and so forth. I mean, I've heard everything from, you leave a message at lunchtime and say, this person lists your name, you said great things about you, I'd love to have a conversation with you. Something to that effect where you can get the voicemail and you say, give me a call back if you've got something good you want to say. And then that way, if they don't call you back, you pretty much make that leap. I mean, there's a lot of tricks that people use, but any recommendations you can give budding entrepreneurs on how do you best find out about candidates that you're serious about, that you really want to get to know?
The best way is to find the person that knows somebody that you know. The best way to get an honest response is to take somebody that they have worked with closely. I mean, actually, quite frankly, we'll even use LinkedIn as a good source to just find people who worked closely with somebody. And or we'll take the reference list and we'll do off-list references on someone. We do extensive referencing, and I would recommend that when you hire an executive team member at whatever stage you're in, if that person's going to be critical to your growth, absolutely do as much referencing as you can around this person. So the question is, how do you get to those people? Again, the best way is to be able to say, I believe that if it's somebody that you don't know, then it's, I believe that you've worked with person X, and I'd be very interested to hear your experience with them. And just leave it at that. And if you don't get a call back, then that is a red flag. But normally people will call you back, and we've even had cases where people will gladly call back, and then, they kind of are a mediocre reference. Well, I didn't really know him that well. Well, but weren't you in the exact same group? Well, yeah, but we didn't really work that well together. That's a pretty big sign.
They never showed up for work.
That's a red flag.
So the technique that we use a lot is we get this nice list of references from somebody, and we call the first one and we ask all the questions, and you know exactly what they're going to say because they're in the reference list. And at the end of the call you say, do you have anybody else you think that I should call about this? And what's their number? And you hang up and you call them immediately before there's a chance. Before there's a chance for it to get back to them that they're going to become a reference and what they should or shouldn't say. And if you can't get in touch with at least 2 or 3 of those types of people where it's been, who else should I get in touch with? And you always ask that and you always call right away. And then you get a real reference check. And you'd be shocked. Sometimes you get people saying, that guy, boy, I'm surprised he used me as a reference. And you're like, well, why is that? And people will usually tell you. Another thing you can do is when you're interviewing somebody, they give you the reference and you say, well, who did you work for? Who did you report to? And you write the name down and you say, who else was in your group? Who did you work with? And you just call those people, or sometimes you see a name that you recognize, or that was at another company that one of your friends had invested in, and you call and get an introduction, and you get kind of this trusted way of going at it. But
to that point, actually, a good method anyway is to have somebody draw an org chart and okay, well, who is this person, and what was your relationship to that? And it's a good interviewing technique anyway, to ask about who was around that person. It'll actually be a good referencing tool and quite possibly a good recruiting tool, because there are people within that group perhaps that you might actually want to be talking to as a candidate.
And one final point on that, everybody doesn't have perfect references, and that doesn't mean that you wouldn't necessarily want to hire them providing you understand what the issues are. And one question that I always use to people is, who is your boss at that time, or who are you reporting to? And what would he say about you if I called him right now? And then they're a little bit more honest because they think you're going to pick up the phone and call the person right then. And people will say, well, he'll say that I was a bit too opinionated, and that even though the company wanted to go in this direction, I kept fighting and fighting and fighting to try and take it in this direction. And it's usually a more accurate self-reflection when they're afraid that you're going to call the person right away and say what it is. And the fact that they're honest there and they don't just bullshit, and what they tell you, you actually do call the guy, and what they tell you is what the guy would say. At least you can say, oh, I trust that guy wasn't trying to, lie and embellish. He was saying it like it is, and you can trust somebody a little bit more.
I think, just one quick comment, I think the other acid test to look for is when they've been part of a business failure or a product launch failure or an organizational failure. That's when you find out whether you've got a really good person or not, because failure is awesome, right? I mean, why pay for somebody's failure experience on your nickel? Let them do it before, right? So that's quite all right. And you'll find some people handle failure amazingly well. They were a team player. They tried to help fix the situation, but it didn't necessarily work out, and it wasn't necessarily their fault. And you can find an awful lot about the caliber of person, the caliber of their character, by what happened when they were in a problem situation. Because when everything is good, when business is good, everybody's hugging each other, slapping each other on the back, and it's very hard to find out who was the real stud in that group.
Yeah, but so I like your trick, Amy, and I'm going to use that now. But I think similar here. I haven't found that. I've always found I've been able to get to people, and I think the key issue is that we all don't spend enough time trying to get to people. If you do all these, you really do have to do these tricks. And I was going to mention LinkedIn, and you have to call from one person to the next. And usually when you have names and you're saying, you're calling about someone, even if it's literally 3 levels removed, it doesn't matter. If I say, oh, Amy said that you knew someone, they don't know that you don't know that person that well. So, and again, similarly, without a lot of tricks, if no one's going to call you back, that says a little. I mean, people usually you want them to have a strong feeling one way or the other, so they're going to call you back. So I think the greater area where people end up hiring the wrong person or hiring without information is just they haven't done their homework. I mean, it doesn't take that long. But it does take half a day, several different times to just aggressively network and try and find out more information. And I would only stop when you get what I call a true picture of someone, because no one's perfect. And so if you don't get that, something where you say, okay, I hear consistent themes from a lot of people, then you really don't know. So I would do that. Then I think that gets to, are they actually what you really thought they were? The second thing I'd add is I think it's really helpful to, if you don't have direct experience in that function, to make sure you bring someone into the process, whether it's a recruiter, a board member, an advisor, in, because I think the other biggest mistake people make is they just assume there's a function they can just add water to, and they go hire a salesperson or an engineering person, and they don't know how to evaluate that person, right? They might have gotten the right references, but they don't know the ins and outs of what makes them successful and what doesn't. So I think you need to, one, make sure you have someone who knows how to evaluate someone from that area to ask the right questions, to, drive to the right people to get a full picture. And then I think the third is some people just don't work out after the fact. They might be great, but they're not the right fit for your business, your market, your time. There's no click, and that's where I think you have to be prepared to kind of let that healthy turnover happen.
And at this stage of growing your business as well, it's very important to apply these same principles to your board and your advisory board. This is also a point in time where you're really trying to decide who you're going to bring on that's going to really help you get to that point of scaling over time. And you're finding out it's not just who's been with what company, and the question is, were they the driving force, or was it market timing, or what the issues were? It really does come down to knowing yourself, knowing this complementary skill sets you need to have both at the board, the advisory board, and staff level, knowing your style, your approach, and that's usually best found and determined simply through talking to others who you trust or or through recommendations. And I find time and again, people just typically do not take the time. They're just you're so focused on trying to keep the lights on, moving forward, hitting your product timelines. Still oftentimes you feel the pressure that you don't have time to make these calls or to have these conversations, but you really can't underestimate the power and the potential on the downside and upside of making this right decision.
Catch one quick question,
yeah,
one quick derivative statement.
Sure.
So just to Matt's point, I see a lot of companies that are going through this 3 to 100 phase, and they'll put their 06 operating plan together, and it'll say we're going to add 15 to 30 people in the first quarter, and the company's only 45 to 50 people. Well, if you do Matt and Howard's reference checking and due diligence, it is physically impossible to hire that many people and do your day job. So you be very, very thoughtful about how fast you can really add quality people into your plan, because people tend to want to think, it's an intellectual exercise, we're just going to go get these people, and it is way slower and way harder to do it right.
Along that line, it's a general rule of thumb that in an aggressive expansion, you can double your head count every year. I mean, there's some companies that can triple their head count, but that's rare.
You're not hiring good people. You're hiring a bunch of goobers.
Yeah, I mean, if you're going to go from 20 to 40 people, it's pretty hard to do that well. So if you some entrepreneurs, they come with a plan, they have 6 people, you give them the money, we'll have 80 people by the end of next year. And you just look at that and you say that, they can have 80 people, but the business is going to go under.
And remember,
maybe through acquisition, that may be about the only way you can make
Well, we're
that
not in
happen.
that game.
Yeah, so I just want to do a time check. It's 10:08. We have a couple other areas we still want to talk. I do see some people starting to raise their hands, so I want to try and leave some time at the end for questions. So let's just see if we can just pop to the issue of scaling. You now want to be a player in the industry, and there is that question. Is the management team the right team to take it to the next level? And this whole issue around both executive and senior management turnover and change. How have you evaluated that? When do you make that decision? And what could an entrepreneur do to be able to grow within the business, to move from the individual contributor idea stage to ultimately the strategy side and be able to actually run a player in the industry? And I'll open it up.
I think the hardest one from an investor perspective is the CEO, because as the company goes through its phases, the skills demanded from the CEO change, and oftentimes you're moving into a phase that's either their strength or their weakness. And so the question is, can the CEO scale personally as fast as the company is scaling? And the hardest one is the founder CEO, who's done a great job in product development, putting the thing together, recruiting the original team. But now you're moving into you're out of development phase, you're into sales and marketing mode, and they're not a particularly good salesperson. They don't know what it takes. They're not good at debugging the sales pitch and finding the money inside the budget, understanding how to get into a complex organization and close. And so that is when you get into the really unpleasant period of saying, hey, if you want this thing to succeed, we're going to have to bring in somebody with that experience to take it to the next level.
I think we're talking about it's just the third phase where there's the getting it going phase and getting a product and doing a little bit of sales, and then there's the scaling, and then there's if you're going to become a player in your industry. To me, the thing is that to start a company and build it, you have to break some of the rules in the industry. So you need to have a team that, to me, is relatively more outsiders, bringing a fresh perspective, but with some people who know the industry enough so that you're not totally off in the weeds. As you go through each stage, I think in the third phase, when you're really like a player in your industry, then you're looking more for people who you probably wouldn't have hired earlier and wouldn't have made it earlier, who can really then say, okay, I know this industry, I know the people, I know the sales dynamics, and so it's more about bringing in those people with experience from the industry, experience at a larger scale. So to me, this one is just the third phase of the continuum, and the same dynamics apply to what we talked about.
So April, I presume oftentimes you're brought in at this phase, and how do you attract the people? Do you all ever get involved with the compensation, the structures along those front in terms of advising the VC firms around what it's going to take to keep the CEO, founder motivated, yet bringing in the other talents, and advice to the CEOs and the founders in the room about things that they can do to make this whole process help the company reach its end goal, which is being an industry player, which is being financially successful, which is being a sustainable entity, which is the only reason why we're putting all the time and energy into this anyway, but oftentimes personality creates a problem.
Right. Well, I think I have actually 2 opinions about the founder during a stage where you're recruiting a CEO. I think the founder is a really important person in the company, and especially if the founder has been able to take the company from very small to a very good level. And it is very difficult. There are some founders that know that they're not going to be the CEO, but it's very difficult once you're in a position to take yourself out of it. And so to a board, it's the conversation around, okay, is this person really ready to step down? And yes, you want the person to step down because the person isn't the appropriate person to take the company to the next level? Well, that's a conversation that the board has to have with the founder. It's not really appropriate for an outsider to say, well, we don't think you're the person to take it to the next level. I think that in a search process, it's very important that the board gets involved in obviously recruiting the CEO, but also in making sure that the founder understands. If it's a case where the founder is accepting that, yes, I'm going to step down, and yes, I need help, then it really kind of, and some entrepreneurs aren't going to want to hear this, but you're either in the game or you're not. Either you accept that you want to bring in somebody, and you will really want to bring in somebody that's going to help your company get to the next level, then be a part of the search. You need to be a part of the search. You need to be a part of the search because it's your company. And that person needs to appreciate how the company has gotten to where it is. And you also have a role in the search. It's people who are CEOs that are looking at companies don't want to see a founding team that's having problems with the board. They don't want to talk to a founder that is kind of hesitant about bringing them on board. And that's where it creates some friction in the search process. We have had situations, now I'm talking about my Sequoia days, where a founder has thought that, yeah, we want to bring in somebody, but the reality was that they didn't really want to bring that person in. That's a real problem, and that search goes awry fast.
The killer story on due diligence is when you ask the CEO of the founding company, how long do you want to stay CEO? And they say, well, I'll stay in that job until we find somebody better than me. Right? And that's a showstopper right there.
Yeah.
Well, we will not fund that company because that is, that is sign language for I'm not going to give this up unless you pull me out kicking and screaming.
So I think April hit it on the head that this comes down to a board issue. And the board's real job in a company is to hire and fire the CEO. It's the CEO's job to build the company and make the company succeed. The board offers advice, it does audits, it does all sorts of various stuff. But in reality, if it's not working out, it's the board's job to say, it's not working out, we need to find the right person, you're the founder, we want to work with you, we need your help to make this work out. And so the guidance for you guys is pick your board carefully and pick a board that, as mentioned, you don't pick a partner in the business whose goal is solely to make money. That doesn't really work. You pick a partner who wants to build a great business, and as a result, you make money. That's kind of an outcome from it. The same thing goes with the board. You don't put people on the board who are purely there just to make money. You put people there who like to build businesses. They have experience building businesses. You do reference checks on your board members, in the same way, and then you're interviewing your board members. Some of them are investors, sometimes they're outside board members, sometimes they're your partner. But in the end, you've got to rely a little bit on your board to give you, if you're a new entrepreneur and you're the CEO of a company that's growing, trust your board a little bit because you pick them to help you build your company, and don't be shy to go to them one day and say, here are the areas I'm having trouble on. What do you think? And some of them might say, well, let's get you a new VP of marketing because that's the problem here, and you're fine for now. Or, you just don't recognize when you're failing, and we need to fix this. You're failing, and you don't recognize it. And it's, I'm not failing. Everything is wonderful. And the board is all saying, no, you're failing. Or you don't see it yet, but you're 4 months out from going out of business. And an argument ensues, and usually the board votes, and there's going to be a new CEO brought on board, and the trick is for the board to then convince the founder CEO to help that process because they want their business to succeed, and this is going to happen, and if they're going to fight it tooth and nail, then there's every once in a while there's an unfortunate situation where the founder is physically thrown out of the company, and we read about it in the paper sometimes, and it's very uncomfortable for everybody involved.
Incidentally, probably the one thing that I would recommend if you're a small company looking to scale is not to bring in a chief operating officer, because that's usually an indication that either the CEO is not doing what he needs to do and the board hasn't come to grips with doing a change, or it's just it is that situation usually that the CEO is just not doing what it needs to take to scale the company. If you get into a situation where you're talking about bringing in a chief operating officer and you're only a 40-member team, that's an issue. look for a functional, either you're lacking in a functional area around you, or you're just not really getting it done as a CEO.
Great. So I'm going to open it up to questions, and we'll start right here. Mike?
Yeah, we just spent about 15 or 20 minutes talking about how to fire people and bring in new people. Does anybody care about mentoring or developing new skills?
I'm going to take
The
one
mentoring
answer.
process usually happens up to the point where you get the decision to make a hire and
I don't
fire
know, you guys haven't
situation.
talked about it. It's interesting you haven't talked about that.
Well, I think to me that's implicit in the, where you should fire faster. I mean, I think you're on the job mentoring, trying to help them make it work. I think the reality in an early stage startup is mentoring is on the job. You're getting results. Hopefully you learn as you go along. But no, that's absolutely a key part of it. I mean, no one wants to, I always start that whenever there's a problem with someone. Like, I want it to work out with you because, one, I care about you, we're working together. Two, even if I didn't, it's just easier to, I don't want to go through a search, you don't want to have to go look for a new job. So I think you start from the position of we're trying to make this work, and I think we all probably say we try a lot longer to make it work.
If you're wanting a formal mentoring program, you got to go to a Fortune 500. The bottom line of an entrepreneurial venture, you have to believe in the team, the people around you. You guys are learning together. You feel and respect the skill set of the people around you, and that is mentoring. But there's no formal mentoring program. You are delivering results.
So the
You're
idea is
driving.
people at fixed points in time, they don't develop over time.
No.
It's like you develop from the actual. I mean,
This is a very complex issue. So
Yeah.
let's take,
Right.
you're 4 people in a company, when you're 8 people in a company, and you need a marketing person, and nobody in the company has any marketing expertise. And this happened to me. I was the CEO of a company. I hired this most wonderful marketing person who turned out did not know a lot about marketing. And there was nobody to even mentor that person. And the board kind of said, none of us are real marketing experts. Go find a better marketing person. There's no time to say, let's spend 6 months mentoring, this marketing person, or let's hire a mentor for this market. Forget it. Get rid of the person and get a marketing person and move on. So I will argue with you at an early stage. Yeah.
Very different.
So, I mean, it is a stage thing. If you're a bigger company, if you've got 12 people in your company and somebody doesn't know their functional area, get rid of them.
Well, I would actually also look at it from the executive team level. I do think, like you said, the CEO is the hardest job because you're the first to get shot. You do have to look at the executive team level of it's a cold, hard job too, and you got to carry your weight. And it's great if you need mentoring and you'll help, but that's not the primary place to start. But you should look at people you hire at executive team level and say, can they mentor the other people that are there? And if they can't, that should be a red flag that they're probably not right for that job right now. So I think mentoring is a part of it, but it is just the cold, hard reality of it's not HP, like it's all on the job. And that's where I think it goes wrong.
Just one interesting comment. We did an analysis of all the companies we funded in the last 25 years, and it turns out if the founding entrepreneur CEO sticks throughout the company, our returns are dramatically better. So there is an incentive for us to
Bill
try.
Gates.
Sorry?
Bill Gates.
Bill Gates, yeah.
Larry Ellison.
Well,
I mean,
the
Skype
Skype
was
guys.
the same thing. If you're
So-
lucky with that, that's one.
So there are many situations where the people are doing mostly right, but they're making a few small mistakes, but they're self-aware about what they're not good at, and they enlist board members or mentors to help them get to the next phase, to have a little more foresight in what they should be thinking about. That mentoring goes on all the time. Often I have a couch in my office, and the CEO comes and lies down on it. And we joke that I got my Lucy shingle up. It's 5 cents for therapy help, and all we're doing is talking about how we forward error correct the business.
And there's
So
a lot
that
of risk
happens
in bringing in somebody new, too.
Yes,
So
there's no mythical
a little
perfect
mentoring goes
CEO.
on before you take that risk and bring in a new person,
I
because
agree.
there's just as likely chance you brought in the wrong person.
Yep. So I want to keep asking questions. You had your hand up for quite a while, so go ahead.
Sure, this actually falls under that, but in making 4 hiring decisions, in retrospect, what do you think maybe the interview process or in those initial phases might might have been that real trigger point, and then what actually led to that misjudgment?
I would say the primary driver is your instinct, is your gut nature. If you look at somebody and you're really not quite sure, they're more likely not. I mean, it's a statistical thing, right? They're more likely not going to work out than if you say, oh, I know this is the right person, I'm 99.9% sure. They're more likely to work out, but that doesn't mean they're definitely going to work out.
I would say poor job description. That you really didn't think through what you wanted enough. You had I want a VP of marketing that understands marketing, but typically there's a much richer job description underneath that about the domain area, the kinds of experiences you wanted to see, what they really did when it required course correction, and so you didn't flush that out before you found somebody that fit at a high level.
Go right ahead, Scott.
Thank you.
We're going to do rapid fire questions here.
Okay.
So,
Listening today, I've heard kind of this notion of identifying the leaders and the followers from the start. Say there's a situation where you have 3 individuals, all with leadership capabilities and strong personalities. Is that taboo? Are you setting yourself up for future pitfalls, or should you proceed with caution? Or?
I think, well, there's one point I didn't get to make earlier. I think, picking up what I think it was Amy said about how you want to just, like, the compensation part's easy. You want to, like, do a lot of scenario playing. To me, one of the most helpful things we did is, and the people don't do, is you should run through every possible scenario to figure out where there's going to be problems. Like, what if the business takes off this way? What if it doesn't? What if one of us gets sick? What if one of us decides we want to, move to Tibet and become a Buddhist? Like, there's a lot of different scenarios that you would learn a lot from, even if they're not that realistic. So I would put that, I think 3 people could work, but you need to talk about it. What if one of us emerges? What if one of us doesn't? What if a different person emerges because we become a different kind of business? And I think, again, the instincts, if you hear, well, it's going to be me no matter what, then that's probably an issue. But if you hear people say, hey, if it's a marketing-driven business and that's you, then, hey, I'll
And if you find yourself in contention from the start, then it's probably not going to work. But if you're all leaders, that's great, but as long as you're not fighting with each other.
So you can have a lot of leaders in a company, but you still got to work like a team, right? And there's a book that probably you've already been exposed to called The 5 Dysfunctions of a Team. I recommend reading it. It's an airplane read going down to LA, and it is very insightful about why teams fall apart. It's worth reading quickly, and I think you can watch for those telltale signs when you try to solve conflicts together.
yes.
This question of whether the CEO will be suitable for all stages of growth has been around a long time, famously described in the Harvard Business Review article, Evolution and Revolution, as organizations go, you want to call it. Is this something you discuss with your CEOs at early stage investments, or do you wait till the problems arise?
You never wait till the problem arises, because then, what is the problem comes into debate. Who caused the problem comes into debate. Whether or not the board is helpful or a bunch of yo-yos that don't know how to provide direction, pretty soon you get into this 5 blind men and the elephant problem. And so when we start a company or fund a company, we sit down and say, this could happen to you. So do you want to still take venture capital money? Because it's not a fun thing, right? You're turning your company over to the VCs, and they give it back to you when you go public or you get acquired. And so it's raising venture capital cannot be always fun.
Well, and I think it's a two-way street, because it's not this, there are different venture funds out there. So I think, one, they're going to assess you as a CEO and decide how good you are and how well you fit and under different scenarios. But I think similarly, you need to find the right, be pretty open with the venture investors. And again, you don't have to ask a lot of questions, but you'll get a good sense. There are venture investors out there that are more interested in financial return in big bang companies, and there's nothing wrong with that. And there's nothing particularly right with that. You just have to decide, do I want, what do I want for my company really? Like, if I want the greatest financial outcome, maybe I do take a firm that's more likely going to churn me, because that's, they're going to bring in someone who's going to make money. If I really want to run it longer, within bounds, there are venture investors that are more patient. And so I think you got to do the fit both ways.
Go ahead.
Question for Howard. If you're a startup with just 2 or 3 people, you're actually putting your own money or something. And then when you're recruiting, one of you talked about taking references. You have to give them a good compensation if they're very good. So where do you get, how do you balance that? Getting a good
So that's, every case is different, and if you're an interesting startup company with unique people involved, and the people are talented, some of the best people will join for no compensation from the start. If they're the type of person who says, I can't join until I get X amount of money, then you have to wait. You can't hire them till later. And you say, maybe they're not as entrepreneurial as I'd like. Maybe you have to go find somebody else. There's no hard and fast rule about it.
So I'm a big believer in that, you want to be run your company as cheaply as possible, but you can't be thoughtless about productivity and velocity. If you get a talented team, the company moves faster. It goes through its generations faster. And so it is about output per dollar, right? And so sometimes getting the rock star and paying through the nose is absolutely the right thing to do.
Yeah, I think she's coming when you have no money and it's
Yeah.
free funding and all that.
Well, then when you got no money, you got a problem. Sure.
Yes, go ahead.
I'd like to ask to expand on that last comment just a little bit about the balance between paying through the nose for a rock star. When hiring business people in particular, sales folks, etc., how do you balance during the recruiting process how aggressive they are with their negotiations versus how aggressive then they'll be when they go out on your behalf? You want to get people who are going to do a good job for you, but you don't want people who are going to be jerks about it. And any advice? Because we've had this a lot of times.
Well, you get the asshole negotiator, and you say once we get him in, he's our asshole, right? And so he's gonna.
And everybody needs two assholes.
Exactly. But what you want to find out, I think, is what they're driving at. What are the real deal principles, and what do they really want? Because often what you're finding out is they want downside protection, and it is a startup. There ain't no doubt. The downside protection is you get to go to another job.
And one experience that we have a lot is that these people, somebody who has a beautiful background, they'll start really high, and you'll look at them and say, there is no way we're ever going to get to this. And you've just got to say, no, I'm willing to offer you this, and we want you, and this is a great opportunity. And if they take it and it works for them, if the company succeeds, and if it doesn't, people who are too focused on downside usually get nothing.
I'm curious, if I may, just more about the cultural bit of it, though. Making them our asshole versus, that I'm not worried about. You can make the money work if you like the person, but trying to recognize, is this an asset or is this a cancer, is the things that we can't always tell.
Well, I think that's where you have to trust your gut, as Howard said. I mean, and talk some around that and really figure out is my gut that this is just an aggressive person, and when I talk to them about their own issues, I can actually work it out, versus if your gut is like, oh, this is this is a pain. Once they're on my side, I'm in good shape. I think your gut's saying, no, this isn't going to work out. And
do your references.
So the quick litmus test is that putting points on the board, everyone's happy that they're being overpaid. If they're not, that's, you've got to get them out. So my view is either they're worth it in the next 9 months or they're out of there if they're taking a big salary.
All right, 2 more questions hopefully. Go for it.
Now flip that. Now if you're the business person and you've got the idea and you're looking to hire tech people, what is the best process, especially if you're in a place like this, to go and find tech people, and maybe to find one, should you find one that's outside of your business, that doesn't want to do your business, that you can trust to use as a litmus test when you bring in engineers? Should you use a professor, or do you just trust your gut and try to read up on it?
Nick, you found a couple of tech guys.
So I'm not sure if I quite understood the question, but go ahead.
Sorry, when you're a business person and you're looking for a tech team to build a product.
Well, I think that's a tough situation, right? Because you're hiring out of your domain and you can be fooled a little easier. And but there are, I would get an advisory group that helps you. You could get a consultant that could be a VP consultant of engineering that might help set up the team. So you better get some proxy evaluation. And I would not go on your gut, especially if you've never hired a VP. Then you're definitely doomed, because you don't know what qualifies as a real VP.
Yes.
Matt, can you give us a little feel with your early hires, how you weigh the importance of fit and culture versus kind of rock star performance?
Yeah, I mean, I think you want as much rock star as you can get, but they have to fit. And I think that actually that's the hardest area why I say it's hard to hire more senior people at that stage. It's just most people aren't going to fit. And I think, again, that's just where you have to trust your gut, and I would encourage you to drag them through the realism of what they're going to do, who they're going to interact with, how gritty their job is going to be. And I would never hire a rock star who tries to convince you that, no, that's a bad use of my time, or that's not really important, or you're thinking small. Like you have to, that's, and I think that's the hardest part, because some of you, I hear this, there's desperation to say, oh, I just need to get this person on board, and you really have to be confident enough to, walk away from a person like that.
There are rock stars that create great music, and there are rock stars that all they do is trash hotels. Right? So and he's talking about the hotel trasher, and they're all over the place.
Well, I hope you all have enjoyed this panel. The panel will be down here if you would like to ask some questions one-on-one. We have a few minutes before you have to get to your next one. But thank